It's from ACCA exam. It's called as further processing decision. Usually this question would come in process costing, but sometimes, okay, sometimes this kind of questions can also come in management accounting. Why? Because management accounting is very general in nature, so these kinds of questions can come in uh, management accounting also. So let's work out. We'll start from the required. You can read along the cursor. Okay, so calculate and conclude whether any of the products should be further processed in division B in order to optimize the profit for the company as a whole. So which products can you further process and which you should not process? So that is the kind of question they are asking. And let's see the full question. Okay, so division A, there is a division called as division A. So division A produces a product, okay, which are L, M, and S. I think they are caps L, okay, caps L, caps M, and capital S. So they produce this, and these are produced using a common process. Okay, they are using a common process, and then each of the products can be either sold by the division A to the external market at split of points. Either they can sell it as LMS, or they can send all these products. Okay, they can send all these products to another machine called as division B. So division B they can send. In division B, it will be further processed. So this is called as, once it is processed, it's called as LX, MX, SX. Okay, so these are the products. So he has also given you some data. He says in November 2013, which is a typical month, division of A's output is as follows. So this is the output, and the market selling price per kg for the products both at split off point and at the further selling price are also given. So L could be sold at this price, sorry, LMS could be sold here, LX, MX, SX could be sold at this price. Okay, and he also says that the specific cost, okay, there is some individual processing cost to convert them at division B is 0.5, 0.7, and 0.8. Okay, further processing leads to a normal loss of 5% at the beginning of the process for each of the products being processed. Okay, so not all the units could be sold as it is. Some of the units could be lost. Okay, so first we'll find out the profitability or the sales value of LMS. So these are products and these are kgs we need, and we need to have selling price. Okay, selling price per, I think it's kgs per kg. So we have 1200 kg, 1400 kg, 1800 kg. So these are the kgs, and this is the selling price. Selling price is 5.6. 6.5, 6.1. Okay, so this is a sales value. So now we have to find out the sales value. So this is a sales value at split off point. Okay, so if you want, you can give a name for it. We'll copy the same and we will work out for okay after split off point. So the kgs actually will not be the same, so they will lose its value. So here there will be some normal loss. So the normal loss is 5%. So this number into 5%. So this is the normal loss, and the output would be, so this is the input is this and output is this. This is what we could sell in the market. So 1200 minus 60. So you can find out for all the numbers. So this is our output. So what would be our selling price? Our selling price is these numbers. Okay, so let's get the numbers. The numbers are 6.7, 7.9, 6.8. So we got a sales value. So we got two sales value here. So one is this one and the other one is this one. Our job is very simple. Find out which has the highest sale value, so that you can do. So L or LX. LX has a higher value, so further process it. M or MX, which has a higher value, MX, so I can process it. Yes. Okay, sorry, I think we can't do that. Okay, we still have a little bit of problem. Okay, I think we forgot the variable cost. So there's variable cost per kg is there. So variable cost per kg is 0.5 for LX, then 0.7, then 0.8. So now you get the profit value. So profit per kg, I think you can put. So profit per kg would be 6.7 minus 0.5. So we got the items. So should this variable costs be for the input unit or for the output unit? Okay, C has given it for output units only. So 0.5 per kg of LX. So this is what LX is. Okay, so we have to find out for this only. Okay, so when we multiply the profit per unit into the output, it is like automatically computed. So we'll get the answer. So we got the answer. We can now compare. So which is now high, L or LX? LX is still high. M or MX? MX is still high. S or SX? S is high. Okay, so we can say so further process and do not further process. Okay, so the ones which has to be further processed are L, comma M, and which something that should not be processed is S. Okay, so this is our suggestion. So that's about this sum. This is a very small sum, but they have given 10 marks for this sum here. So not sure why they gave 10 marks. Okay, so we'll move on to the next one. So the next question is a very basic question where it's a make or buy decision. So we'll just copy the element. It's a make or buy question. We have another make or buy and one more make or buy. Okay, so totally we have 3 make or buy problems. So we'll start from the first one. So the first one, if you see in make or buy problems, okay, the key point is you have to ignore the fixed cost. Okay, because they are assumed to be recovered, so do not add fixed cost here. Okay, you don't need to consider fixed cost. So just read this question, you will get an idea. So this product, if made in the company, it is 6, and if it's made in the bought, it is 5.6. So should we like buy or make or buy? So it seems that it is better to buy the product. Okay, but let's see. Okay, so the first question is, should we make or buy? So we'll just so this is the first question. Should we make or buy? Okay, so in the market price is 4.6. Okay, so we have two questions here. So we'll start. See, per unit we can find out per unit or per amount. That won't be a problem. Per unit wise, the relevant costs are 2 and 2.5, and the other variable cost is 0.5. These are the variable costs. Okay, so the total cost of manufacturing is only 5. It's not the 6, because we have to ignore the fixed cost. So the buying cost is now how much? 5.6. 5.6. Now the suggestion would be, okay, as making cost is lower than buying, it is better to buy. Sorry, it is better to make. So that's about the first one. And so if the same product is made for 4.6, then if we could buy it for 4.6, then we should buy that product, because our total make cost itself is 5, right? And if you could buy it at 4.6, that seems to be much better. So we can say, as making cost is higher than buying, it is better to buy. So we'll start from here. This is the second problem. So you can read along. Okay. So they are telling that to produce the product it takes 15. So of course you have to ignore the fixed cost because the company seems to be producing a lot of products. So they are producing only part, this is part 47 alone. So they are producing a lot of product, and our assumption here is note fixed cost is already recovered by the company. So the cost of making is going to be 10, and we have two cases here. So we have case A. We'll start from that. Case A is it is possible to hire out the facilities at rupees 30,000 per month. Okay, so cost of making is 10 per unit, and in terms of amount it's going to be 10 into 20,000. So that comes to 2 lakhs, right? Now the case tells you if we are not going to produce the product, we can let out the facility for rent, and we'll also get another 30,000. Okay, so first we'll see like what is the cost of purchase. So the cost of purchase is 12 rupees per unit, or 12 rupees per unit. So that comes to 2,40,000, right? It comes to 2,40,000. But we have to pay this 2,40,000 to get the units, but we can get an income. So from this cost we will reduce the income from rent. So income from rent would be 30,000 per month. So now the effective purchase cost is 2,10,000. So we have to compare this 2,10,000 with this 2 lakh. Okay, so still it seems to be costly, even though you can buy a 12 and you will get an additional rent of 30,000. Still it seems to be costly. So our suggestion would be make. Okay, so let's see the other alternative. The other alternative is B. So B says, see here also it's going to be the same purchase cost. So the purchase cost is going to be the same, but I don't think there's going to be any idle facility. But they say that this idle facility could be used to produce 5,000 units per month of a product at a variable cost of 40, and which could be sold at a price of 50. So this idle facility could be used to produce some other product. Okay, so we can buy part 47 and we can use this facility to produce another product called as X. So we can say that it is less income from X. Okay, so how much would be the income? So the income will be 50 minus 40, 50 minus 40, right? So that's a income. So we'll get 10 rupees per unit we'll get. So we can't put that 10 outside. Okay, we can't put it there because 10 we have to only put it here. So we will remove it from here. This 10 rupees item, how many items we can produce? We can produce only 5,000. So 5,000 you can produce, and that becomes 50,000. Now the effective purchasing will be only 1,90,000 because you have to pay 2,40,000 for the buying from outside. This additional facility can be used to produce X, which has a contribution of 10, and 5,000 units could be produced. So 50,000 is the income. So 2,40,000 we have to purchase the part X, and 50,000 is the income that we'll get from selling X, and our total effective cost is only 1,90,000. So what is our suggestion? If we produce, it is 2 lakhs. If we buy, it's our effective purchase cost is only 1,90,000. So that's what you have to do. So that's about this problem. Okay, we'll move on to the next one.